Hi folks, this is Lisa from AI Daily Review, and this is the Daily Pulse. Every day we cut through price noise, headlines, and emotional whiplash to focus on the signal beneath the surface. And today's signal is simple, uncomfortable, and easy to miss. If you want to know where silver is going in the US, all you have to do is watch Shanghai. Let's zoom out. Most people think silver trades on supply and demand. It doesn't, at least not where most people are looking. Western pricing mechanisms are dominated by paper, futures, derivatives, netted exposure, leverage clearing. These systems were never designed to deliver metal. They were designed to set reference prices and absorb risk. That works until it doesn't. Because when physical demand matters more than paper settlement, price stops being a signal and becomes a stress test. That's where we are now. Here's the Daily Pulse insight most people are missing. The Shanghai silver market opens at 3 p.m. Eastern Time, the exact moment the New York market closes. Shanghai is one trading day ahead. That means Shanghai's Sunday close sets New York's Monday open. Shanghai's direction becomes tomorrow's Western reality. The East is literally pricing the future before the West wakes up. This isn't conspiracy, it's mechanics. When Western markets reopen, they aren't discovering price, they're reacting to it. People fixate on the Shanghai premium like it's a mystery. It isn't. China doesn't need a $40 premium. They only need enough premium to incentivize arbitrage, pull physical silver eastward, drain Western vaults quietly. A 10-20% premium is a vacuum, not a statement. The goal isn't to scream scarcity. The goal is to own supply. When in doubt, zoom out. This is where retail gets shaken out. Price spikes, price crashes, confidence wobbles, and people ask, what broke? Nothing broke. Volatility is doing exactly what it's designed to do. Flush emotional holders, reset leverage, protect overstretched balance sheets, restore paper control, temporarily. But here's the key. This is not retail-driven demand. Retail fear doesn't stop. AI data centers, solar manufacturing, EV supply chains, defense and grid infrastructure. Industrial demand doesn't panic, it consumes. Let's be precise. There is exactly one scenario that invalidates this entire beacon wave analysis: a previously unknown, massive strategic silver reserve being released into the market. Not announced, released, physical metal moving at scale. And here's the problem: if such a reserve existed, it would already be deployed. Because governments don't sit on stabilizing assets during stress. They use them. The silence is the signal. A rising silver price doesn't just create volatility, it creates questions. And once people ask why, the answers get uncomfortable. Paper dilution, leverage asymmetry, settlement risk, resource nationalism, industrial hoarding. At a certain speed, price stops being about profit. It becomes about access. When participants stop trusting settlement, the exchange doesn't just lose liquidity, it loses authority. That's existential. So here's the rule: simple, boring, effective. When the price action feels confusing, when the narratives get loud, when volatility spikes, zoom out. Watch Shanghai, watch the premium, watch physical flow, not headlines. The East prices reality, the West reacts to it, that's it. That was the Daily Pulse from AI Daily Review. This isn't about prediction, it's about orientation. If this shifted how you see the silver market, hit like. Subscribe if you want signal instead of noise, and ring the bell, because in this market, timing isn't everything, it's the only thing. See you in the next Pulse.